In other news, Kenya will have to borrow up to 124 billion shillings through floating a Eurobond from the international capital market. This will go towards partly repaying debts and meet the 2021-2022 financial year budget deficit. And with a budget of 3.01 trillion shillings and an ever-rising loan book needs repayment, KTN's Brian George Otieno has the details of just what a fresh commercial loan from Eurobond means and just why the man at the helm of the National Treasury is concerned.
Kenya's outstanding debt from both internal and external parties stands at a whopping 7.3 trillion shillings. This is about 65.6% of the country's gross domestic product. But having already received 500 billion shillings from multilateral concessional lenders like World Bank, the International Monetary Fund and the Africa Development Bank, Kenya's borrowing limit is way past the mark. This leaves the country with one more option, the Eurobond. It will be the fourth time the country is borrowing from Eurobond, a sovereign bond that is normally denominated in US dollars and one that gives loans to borrowers at an interest rate of not less than 5%. So beside the high interest rates, the loans normally come with a shorter turnover period, which normally piles pressure on the borrower, and the same situation which Kenya finds itself right now. But how did we get here? Here's more perspective on this story. Kenya's debut Eurobond was in June 2014, with the country raising $2 billion, or about 218 billion shillings. $0.5 billion was offered at 5.875% and was to be repaid in 5 years. Another $1.5 billion, or an equivalent of 190 billion shillings, attracted an interest rate of 6.875% to be repaid in 10 years. The money was for general budget support, including funding infrastructure projects and for the repayment of a syndicated loan of about $600 million, plus accrued interests of $4.6 million. The second time Kenya borrowed from Eurobond was in March 2018, when another $2 billion USD was borrowed. $1 billion US at 7.25% for 5 years and $1 billion USD at 8.25% for 30 years. The money was for development initiatives including infrastructure and debt liability management. Then just 2 years ago in May 2019, Kenya borrowed $2.1 billion US from Eurobond with a repayment period of 7 to 12 years tenures. The money was for development, infrastructure, general budget spending and refinancing of the previous debt. And now, according to the budget policy statement, the government will be looking for an extra 124 billion shillings from the World Bank at 7%, while the longer-dated tranche was priced at 8.0%, well below the initial guidance price of 7.5% and 8.5% respectively, the ministry reported. All this will push Kenya's debt stock of Eurobond to 734 billion shillings. The money is expected to be channeled towards repayment of a 351 billion shillings mature loan. Currently, the external debt repayment in the next financial year stands at 613.4 billion shillings. And with another 262 billion shillings expected from the IMF through extended credit facility, IMF and the World Bank have downgraded Kenya's risk of distress to low. The Budgets and Appropriations Committee had recommended that priority be given to essentials and complete pending projects in a bid to clear backlog of pending projects. Currently, with the budget's constraints in place, Treasury will have to apply opportunity costs and budget cuts on some projects, and the tough balance between development and debt repayment is juggled. Brian George Otieno, KTN News.
All right, and to that breaking news on your screens, the news coming into our newsroom at this hour, former Prime Minister Raila Odinga has tested positive for COVID-19.